So September 2023 in the housing market. So what's going on overall? So we definitely have seen, existing homes come down. There's overall, we know this low inventory has been the biggest thing that we've talked about for the last couple of years out there compared to demand. So we are seeing that a little bit more, that we're seeing, less inventory on the market. Seeing a little bit more now in the fourth quarter, coming into the fourth quarter, which is a good sign. So we'll see how things continue to go through. Lawrence Yun, the chief economist at NAR, said two factors are driving current sales activity: inventory availability and mortgage rates. Unfortunately, both have been unfavorable to buyers. Absolutely. Rates are up, the demand is still strong, and there's a low inventory, which is, causing that demand to be strong. We're seeing that out there, but buyers are still buying. So, and I think the reality of it is if now is a good time for you to buy in your life, you should definitely be buying out there. One of the things that we're seeing at, average inventory of home sales, we've actually seen a little bit of an uptick from what we saw about a year ago. So that's increasing. That's good. We're not going to get back to pre-pandemic levels for a while, I think, but we are still seeing a little bit more supply. So I've said that in 2019, let's call that's 100% saturation for our area. This year, we're probably going to see 70%. Next year, I'm not sure whether we're going to see 75 or 80. We'll see a little bit more than this year, but we're not going to be back to 100% probably for a while. And obviously the big reason, a lot of people are not moving that have their 3% interest rates. And sometimes it makes sense for them not to move. So we'll continue to see that, see new homes come on the market. Other parts of the country, they'll be building more over the next, 5 to 10 years as well. One of the things that we're seeing over the trend over the last 10 years versus the years prior is the average time somebody lived in a home in 1985 to 2009 was about 6.1 years. 2010 to 2022, the average was 9.3 years. So it went up about 50%. And that also makes sense of why people, there's less inventory, people are staying in their homes longer. So all of these are kind of these factors that are coming in that are creating the housing market that we're at now. Realtor.com is saying that while inventory continues to be in short supply, August witnessed an unusual uptick in newly listed homes compared to July, hopefully signaling a return in seller activity heading towards the fall season, which typically is the best time to buy a home. I don't know if I agree that I think spring is the best time to buy a home, but you are seeing fall as always your second best. We're maybe seeing a little bit more of seasonality come in. I know at the end of August, we kind of put the brakes on stuff a little bit, any price reductions, new listings come on the market, waiting for that September market. Why? Because once, kids get settled in schools, people kind of get back to that work mode coming over from the summer, whatever the case may be, we have a secondary market usually in the fall. And we are starting to see that already. We're a few weeks in. We are seeing, people that they are purchasing, we're seeing a little bit more inventory come on the market, and we're seeing kind of some movement along things right now. One of the things we want to talk about is the mortgage rates. So, of course, they've gone up. The 10-year Treasury has gone up, and also the spread between the 10-year Treasuries and the 30-year mortgages have increased. So what will make this change? Of course, if the Feds decide to lower the Fed funds rate, I think we will see, a little bit more of a reduction in mortgage rates. Remember, they're not directly correlated, but they have an effect on the market. And then also the spread in between. When that shrinks, we're going to see these mortgage rates come down when some of the uncertainty comes out of the market. JP Morgan, Jamie Dimon had put out that he does believe that the U.S. will be in a recession. I think it was in 2024. And once we kind of get a little bit more of kind of stable footing, whether we're going into recession or we're not, the unknown is what scares people. Whatever the case may be, we'll be able to kind of navigate through once we have some certainty. And once that happens, I do think rates will come down. I don't think we're going to see a 3% again, but I wouldn't be surprised to see us somewhere in the mid-sixes. At least that's what I'm hopeful for. We've seen this, that a lot of home buyers under the age of 30s have gotten gift, from family members, from, relatives, whatever the case may be. We are seeing people put a large amount of money down, which is offsetting the rates. And, the generation before them that has owned the home for a while, maybe they're sitting on $500,000 of equity or money in their retirements or money in the bank that they've saved over the last 10, 20 years. And they're saying to kids, grandkids, nieces, nephews, whatever the case may be, here's $50,000, here's $100,000, whatever the case, to try to help offset some of these higher interest rates. And we are seeing that more and more in the gift letters and gift loans, are being more apparent in mortgages today. So let's talk about the future. What do we see? I do think that we're going to see a uptick in supply, not a huge amount, but a little bit coming through. I didn't expect rates to hit over 7 again. They did. I'm hoping that, with the election year coming up, I'm hoping that we're going to see, some stabilization, get those rates back under 7, which at some point I believe that they will in the next 6 months. If they go to 5.5 or something like that, honestly, I think that prices will go up a lot, but I don't know if we get down that low, and it scares me if prices jump up another 10%. But what's coming out from from the different realtor sources, they're putting in 2023 3.2%, 2024 2% up. So they're expecting next year that we're still going to be an increase, but it's going to be lower than what we've seen kind of in the past. Then you're starting to see in 25 to 26, 27, anywhere from 3.25% to almost 4.25% growth per year, which if that's the case, that's a healthy growth. I will take that all day long. So you'll see from the slide below, they're all in the green, and I think that makes a big difference. So overall market, it's solid. We're seeing a little bit more inventory. Rates are up a little bit. We are still seeing multiple offers on certain properties. Buyers are also being pickier on certain properties. So it's important to make sure that the house is together. When you're looking at financing, if you're going to buy a property, the main thing is to not only check, make sure you get the pre-approval, but are you prepared to go into this market with a low inventory, high interest rate where you will have to compete for homes? So as always, any questions, feel free to reach out. Give me a call, text, shoot me a DM, whatever the case is. Let me know how I can help you, and happy to get you going with the new year.